for having me on. I really appreciate it.
Yeah, thanks for being here.
All right. Welcome, everybody. Glad to be here with you. I'm Vince Vora, the head trader from Trading Winds. And today I want to talk to you about Victory 2.0. It's a strategy that we developed just before the COVID pandemic started. So we've been trading with this for about 4 years now, but we recently, just a few months ago, launched the second version. That's why we have 2.0 here. We had Victory 1.0, now it's 2.0, and I'm happy to share, tell you all about it in just a few minutes. Just a bit about myself. I've been in this industry for almost 4 decades now, and it did quite a bit throughout. Created several strategies and trading systems along the way, but Victory is by far my favorite and most accurate. Over the past several years, going on about 8 years now, I've been coaching students and just loving it. That's what I do most of the time now. We have a great group here at Trading Winds. Some members have been with us for over 8 years now, almost 10 years. And it's just a fantastic group. I'll also tell you a bit more about that as we get through the presentation. Just before we begin, though, I do want to stress trading can be risky. So please don't trade with real money until you get completely comfortable with the system that you are using. Now, I want to tell you about Victory, and specifically 2.0. I'm going to explain what you're seeing on the chart. There's a lot going on here, but what we like to do with this is keep things very, very simple. So I will give you an opportunity to take advantage of this indicator and get access to it later on for a 30-day trial. And along with that comes a couple of training classes that will explain exactly in detail how we use it. But that's what I'm going to try to do here today, is show you exactly how I use this in my daily trading. So let's begin with what you're seeing on the chart. And then I'm going to go through several examples, different time frames, different markets. This is based solely on technical analysis and can be used on any market, whether it's futures, Forex, crypto, equities, you name it, any exchange around the world, any time frame. It's all just solely based on technical analysis. Okay. And well, as I said, we like to keep things very simple. So there are very few rules that we use, but to be successful, you need to follow those. And that's why we will be giving you the training classes with this when you try it out. Now, let's go over this. So you're going to be seeing buy signals, sell signals, exit signals, etc. This is the algorithm behind the scenes that is designed to identify trend. That's what we like to do, is trade with the current trend. So when there is a strong trend in place, the algorithm will plot either a buy or a sell depending on the direction. Now, you will notice sometimes that we go from a buy straight to a sell and not necessarily an exit before we get a new sell signal. That doesn't mean you are going to go from a long position to a short position. Any change in color, first off, means that you exit that position fully. So if you received this buy signal and you went long, and you see a TP here, these TP, that stands for take profit. Those are only suggested levels of where you might want to take some profit along the way. Again, we'll go over the rules in the class in more detail. You will also see these little circles, green and red. So if we're already in a buy and you see a dot, a green dot, it means the same criteria that came together for the buy signal has come together again. Instead of labeling it as a buy, we just put a dot just to let you know that we're already in this trade. So if you miss this one, you can now take advantage of this entry. Or if you're already long, you can add to your position every time you see that next stop come in. It's just confirmation that the algorithm is continuing to tell us that this is a great trade to be in. Okay. If you see a change in color, whether it's labeled an exit or a sell or a yellow bar means we're not long, we're not short. We want to be on the fence, just watching. Okay. Either way, you're going to exit that full position. Okay. So depending on your risk tolerance, the way I like to use this is I enter when all the rules line up, and I get in. I take some profit, at certain levels, and I add back in when it tells me to, and then I exit the full position here. Okay. Buys and sells are the algorithm telling you what the direction should be. Exits are obvious. The yellow candles are meaning you should be neutral. You shouldn't be long or short. This blue line here is the 20 period simple moving average. Why do we have that on our chart? Well, that's to judge momentum. The 20 period moving average is obviously, it takes the last 20 candles or bars into consideration, averages it out, and plots that line. So if you have a 20 period MA that is sloping higher, it means price has been climbing. If it's sloping lower, it means price has been going lower. Now, what matters to us is the degree of slope. The higher the degree of slope in the direction of the trade, the better it is for us. Because not only do we want a strong trend, we want strong momentum. Okay. The higher that degree, it means the stronger the buying pressure. And that's what we want to look for. Okay. There are a couple other pieces to this that I'm going to explain, and then I'm going to go over the basic rules that you should be paying attention to. Now, as we go through this, by all means, let's make this interactive. Ask whatever questions you want, and also type in any symbols that you might want me to bring up that you want to look at. It could be a trade that you're in, a symbol that you just like to trade a lot and want to know how victory would do on. It could be anything at all, and it could be from any exchange around the world, by all means. Now, you have this little table on the side here where you're seeing Meta is a sell reentry, Tesla is a sell, and XOM is an exit, etc. If we go into the settings here on Victory 2.0, you're going to see on the Inputs tab that we have this table. Now, you have the opportunity to remove that table off your chart. There it goes, disappeared, or keep it on. And you have the ability to choose the number of rows on this table. It goes anywhere from 1 to 20. So, and you can manually enter your symbols in here of up to 20 markets that you want to keep track of. So I like to do it with open positions, for example. So say you have 10 different open positions and you just want to be alerted if there's an exit, right? Or some kind of change to it. And you can just keep it on here. That way you don't have to constantly be going through each chart to see where you're at with that particular security, right? So that's a nice feature. The other feature is if you go into style, any of these symbols, the buys, the sells, the take profits, etc., you can remove or add whatever you like. So you can customize this indicator to your liking. It's all very customized. You can change the colors. You can, do whatever you like. And again, the size of the table, etc. Okay. I'm going to uncheck the table icon, and I'm going to take off the take profits, just because I like a cleaner look myself, and it's a little quicker in changing from one symbol to the other. And so we have a limited time here. So that's what I'm going to do with the top portion. Now, at the bottom here, you see two ribbons here. Now, these ones are pretty much all green except for this past area here. But if you look to your left here, you'll see the first ribbon is titled weekly and the bottom one is monthly. That is because we are on a daily time frame. What this does automatically is plot a ribbon for two higher time frames than the time frame you're on. And what the color represents is the color of the victory indicator. So if we were to switch to a weekly chart here, you'll notice that the current bars on the weekly time frame for this market, which is the SPY, the S&P 500 ETF, is green, and that's why the ribbon is green. Also on the weekly, you'll notice that both are monthly. That's because monthly we consider to be the highest time frame, and so that's all you're going to see. And if we move to the monthly time frame, you're also going to see the monthlies, because we don't go any higher than that. But for example, going back to the daily, you'll see the weekly and the monthly. If, say, we go down to a 1 minute chart, right? Here's a 1 minute chart. What you're going to see is the ribbon of the 5 minute and the 15 minute, right? If we switch to, say, a 30 minute chart, right, you're going to see a 1 hour and a 4 hour. So it automatically plots two higher time frames for you to make sure that you're trading in line with two higher time frames. So if you're seeing red on whatever time frame you're on, you want to make sure that both ribbons are red on the higher time frames. That gives you an edge. That gives you a much higher probability that that trend will continue in that direction. Okay. Now, as I flip through here, you'll notice that these signals fire off regardless of what the time frame is, and do so with some pretty decent accuracy, as you can see here. Now let's go through the rules first, and then I'll flip through a number of different charts to show you exactly how we use this and why we use this. So again, I'll start with the S&P 500 here, so I'm just on this chart. And the first thing that we're looking for is obviously a buy or a sell signal. So here's a buy signal. The next thing we want to focus on is where the bar is in relation to that 20 period moving average. We don't want that bar to be far away from the 20. Reason being, whenever we get far from the 20, we tend to snap back, right? Just like this. We move away from it, we snap back. We move away from it, we snap back. So the last thing we want to do is buy up here only to watch it pull back against us right after we go long, or go short down here and watch it go against us, right? So we want to pick some up right along that line if we can. And another thing we look for is where that bar closes, right? Does it close near the high of the bar, or in the top portion of the bar, or does it close near the bottom? The ones that close in the top portion of the bar are much likelier to follow through, right, and continue in that direction. So we prefer a candle like this. And then we look at the slope on the 20. And if it's sloping in the direction of the trade, so in other words, for a buy, we want it to be sloping higher. And remember, the degree of slope matters. Okay. Generally, just visually, about a 45-degree angle, something like this, is what I would consider a significant slope higher. So something like this, which is even higher, is even better. Now, you don't have to wait for a slope that dramatic. Any kind of slope will do, but 45-degree angles or higher is what I consider the best case scenario for us. So here we had a real nice slope going as well. And then I look at the ribbons, right? And I'm going to squeeze them down a little just to make some more room here. And so if I'm looking at a long trade, I want both ribbons to be green. Okay. What it means is if one is green and one is red, it just means you're taking a bit more risk, because on one higher time frame, this will be trending lower, while on the other it's trending higher. So it's a mixed picture, which doesn't give you, odds as strong as we would like. What we want to do is trade with the odds in our favor. That's what we're trying to do. We have no idea what tomorrow is going to bring. We have no idea whether the market's going up, down, or sideways tomorrow, next week, next month. But what we try to do is identify a strong trend and confirm it. Not only that, but confirm that there's momentum or buying pressure there, and confirm that the higher time frames are the longer term trend is also telling us it's in the same direction. So that way we have a real edge in the market. And that's simply what we do. So as I'm flipping through these charts, what I'd like you to focus on is those areas where there's slope with those signals. What we try to avoid are flat areas or choppy areas. That's where traders lose their money. Okay. Whenever you see a channel, and a chart of NVIDIA comes to mind recently, just in here, right? This is where traders, or especially one like this is where traders will give their money back to the market. Okay. What happens during a consolidation? It's usually defined between two levels, right? You get a series of highs along the same price level and a series of lows. Okay. Now, if it's wide enough, you could trade, from the lower point and vice versa and try to make some money that way. But more often than not, they're in a tight range. And what happens is if you buy during that consolidation, stopped out. You sell, you get stopped out. You buy, you get stopped out. And over and over and over again. It's one stop out after another. And that's what we try to avoid. Now, one of the things we use is that same 20 period moving average. What do you notice about the 20 in here, right? Is that most of the time it's pretty flat, right? And once you get one touch on one side and two on the other, you've started a channel. So you just sit this one out. So what we're trying to do is avoid all the signals in here and only focus on the signals with significant slope. All right. Now, a signal like this here at the time, the 20 was completely flat, right? But it worked out quite well. Well, I'm going to tell you how you can take advantage of that despite that flat moving average. And those conditions that I'm going to give you are conditions that wouldn't normally show up in a channel. And that's how we avoid these areas, yet we take advantage of these areas with Victory 2.0. So, but if you're just starting out, you don't know much about technical analysis or anything like that, just by focusing on the ones with slope, 9 times out of 10, they will save you from all that choppiness and getting stopped out over and over and over again. Okay. So let's just have a look at some of these and start with NVIDIA, for example. Let me go back here. This trend started a long time ago. And as you can see, if you look back at the area where there's a slope, such as this, and I know hindsight's 2020, but when we're looking at a trade, even if it was one like this one, this dot, right? We didn't want to take this one. Why? The 20 was negative. It was sloping against us, not in line with the trade. It's not sloping higher with the buy, it's sloping lower. So we want to avoid that. But now when we get the reentry here, this dot, it's sloping significantly higher, right? So now it's telling us it's a safe time to take it. If you're more familiar with technical analysis, you can look back and say, well, if you look at these highs here, there's a series of highs right around along the same line. And what happened? We broke above that trend line, and now we've come back to retest it. And this is a great time to buy, right? So you can certainly add other pieces of technical analysis to the strategy, make it even stronger. You can add charting patterns, candlestick patterns, etc. The more you're familiar with, the better, the easier it'll be. But if you're not familiar, all you have to worry about is the slope on that 20. Is it sloping in the direction of the trade? Is that candle near enough to the 20? Did it close in the top portion of the bar? All of those things is what we're looking for. And again, we're going to give you a checklist of 8 items that you must have before you enter a trade. Without that, you're just taking more risk, and it's unnecessary. And there are plenty of setups, on any given night. So just keep following the rules. And so, you would get in here, you could add to it, you would exit on a change of color, and then again, you wait for the next buy or the next reentry and so on. Now, going back to that example up here, let me zoom in a little so you can see it clear, where we had a flat 20. There are two conditions that would allow us to take a trade when the 20 is not sloping in the direction of the trade that we're planning to take. So let's focus first on this buy signal here. The two conditions are this. We either have to clear a prior high or retest that 20, okay? Meaning move above it, come back, bounce off it, and confirm that we're holding support there, okay? So on this one, we don't have either one of those conditions, do we? We don't clearly break a prior high, and we haven't retested anything yet. So here, I would not take that buy. This would be one of the signals I would ignore. Now, we kind of go sideways a little. We move down, we get a sell. On the sell, it's the same thing. The 20 is not sloping lower, is it? It's more or less flat. So not an ideal sell. Again, two conditions. Have we cleared a prior low or have we retested the 20? Not really. So now we get a buy. All right. Now we can take this as a retest or just wait until we clear a prior high. When you have a signal like that, doesn't mean you have to ignore it completely. For example, here, we could have just marked this high here and just waited, right? Here. So if the next day this had crossed that level, we could go in at that point. It did not. It pulled back. Now here, we're getting that. And now we can take advantage of that. So basically what we want to confirm with breaking a prior high or low for shorts is that if we were in a channel, we're breaking out of that channel. That's what that's doing for us. Okay. So just like back in here, right? It's confirming that we're breaking out of that channel. If we don't have slope on that 20, a lot of times, by the way, in a channel, when you get close to that breakout point, the 20 will already have started to slope in your direction. And a lot of times that 20 will give you a heads up that it's coming. Okay. But that's what we want to focus on. Is clearing that prior high or retesting that 20, meaning that it's proving to you that it broke to the other side of that moving average, it came back and it held it and it bounced. It's not breaking back below, right? And then you can take advantage of it. Otherwise, you just sit and wait for another dot to appear, another buy signal along the way. Sometimes when the trend is as strong as it was here, you don't get that opportunity and you move on to a different chart, and so be it. But oftentimes we can take advantage of the start of that just with those rules. Okay. Now, the other thing you'll notice about victory is that it gets you up pretty quickly when it's not going your way. So there will be instances like this where you get in and the conditions seem ideal, right? And it'll start to move in your favor and then it'll turn and then you'll get that change in color and you'll have to exit that position and either break even or a loss. The key here is that we want to keep our losses small. That, you know, if I had to give anybody one piece of advice after my almost 40 years in the markets, one piece of advice, it would be to just keep your losses small. That's what gives you an opportunity to, you know, eventually be consistently profitable in this business. If you take big losses, you will eventually wipe out your account if you haven't already. Many people do when they first start out. It's very normal. But think of this, you know, one trade like this, how many of those small losses will it overcome, right? So it doesn't take much to get into profit. That's the benefit of keeping your losses small, is that to overcome them is very easy. When you take a significant loss, to overcome it is very, very difficult. And you're going to have to, you know, spend many weeks and months of having profitable trades to overcome that one big loss, and not to even mention how it affects your mental state and your confidence, etc., as a trader, which are all super important. But what we want out of the victory system and what it gives us is not only more winners than losers, but having our winners be much greater than our losers. That's the kind of math that we want to work with. So, as I said at the beginning, this works with stocks, futures, forex, and different exchanges. Let me show you. This is the Nikkei over in Tokyo, right? And it's going to work the exact same way. Look at this trade. Exactly what we want to see. We have a buy signal. Okay, it's not the original one, but the same criteria came together. And let's go back and start from here. Was this a valid buy? First of all, no, we had no slope. Did we take out a prior high? We had not yet when we got that buy signal, right? So we were waiting for it. Eventually got it here. But we had a re-entry here. There's your retest, right? You moved up, you came back, you retested that 20, and you bounce, okay? And if you want to be a little safer, you even wait for it to break that high. So here's a high that, every time buyers pushed it up here, sellers would push it back, right? They try to get some momentum, sellers push it down. Sellers push it down. Sellers push it down over and over and over again. Eventually, whoever was selling there ended up selling all their shares, sold, it dried up. We broke and off it goes, right? And now along the way, like usual, it goes in zigzag. It rarely does something go in a straight line up. You get a consolidation, and now you get a buy signal. You could mark that prior high and look for a break normally if you didn't have any other system, but this is giving us a buy, and off it goes. And so these are exactly the kind of trades we're looking for. This is textbook, very simple. Higher time frames are aligned. They're both green. This is where the odds are stacked in our favor. And you will see that over and over again, whether it's an index like this, and this is, Tokyo, here's Hang Seng. You're going to see similar setups along the way. You have Shanghai, and here's a sell. We haven't covered sells, but it's the same criteria in reverse. What are we looking for a sell? Aside from the signal, we're looking for a slope lower on that moving average, right? We're looking for that bar to be close to the 20. We're looking for it to close near the low of the day instead of the high, right? We're looking for the two higher time frames to be red, just like this. And off it goes. It's really very simple, right? So again, here's the Nifty in India. It's the exact same. So, here's a buy, right? Here's a reentry. Here's a consolidation period. It's all the same. Higher time frames aligned, and off it goes. When you're talking about individual stocks, right? Here's Abercrombie and Fitch. Super clean. These are no-brainers, but this is what you want. If you get a chart that looks like this, I always use the Zoom chart because it's a complete mess, right? If you get a chart that looks like this, can you really tell what the trend is? Is there a clean trend? There is not. And the other thing about messy charts, all this back and forth, is your odds of getting stopped out of a position increase dramatically when you're trying to trade a chart this messy. What you want is to look for nice, clean charts, and there are plenty out there, just like ANF. For whatever reason, this isn't a strong trend higher throughout this period. Now, you could pretty much buy anywhere along that line and make money. That's how much of an advantage it is for you to trade with the trend in your favor. Okay. And that's what we're trying to do. And then using the 20, we judge the amount of momentum behind that trend, which here is obviously significant by looking at the two higher time frames. We're confirming that the medium term and the long term outlook are telling us the exact same thing that this shorter term outlook is telling us. So we're just stacking the odds in our favor. If you're looking at the trades that don't work out, like this one here, you see this dot, we had slope, we had everything we needed, higher time frames aligned, boom, it immediately stopped us out. Think compared to this buy, taking us out here. And we're not even talking about, leveraging the trade by buying here, adding to it here, adding to it here, here, and then exiting, right? Now, we also, when we give you a copy of the indicator and that training class, we're going to talk about money management, right? There's 5 simple rules that I will cover in one of those classes, where if you follow those 5 money management rules, and they're very simple rules, you will never take a big loss again. And you won't hear a lot of people guaranteeing you anything in this industry, and they shouldn't, just because it's so unpredictable, right? But I will make you a guarantee. If you follow those 5 rules that I will give you, you will never take a big loss again. When I first started out, like I said, almost 4 decades ago, I took a huge loss, a huge loss. It really affected me when I started out. I thought I knew a lot more than I did. I obviously didn't. And I overexposed myself, and I got hit badly. And it took me many years to recover from that. But it also led to those 5 rules that I put together that will never result in another big loss again. If I follow those, the only way I take a big loss is if I break the rules. That's it. So if you're able to follow rules, you will never take a big loss again. I guarantee you that. And that's what matters here. Not so much that anyone can get lucky, can buy a stock and get a sizable move. What matters is how you manage that trade and what you do when things go against you. Okay, waiting it out, hoping it bounces and comes back, never works. So I shouldn't say never, but rarely does. You'd just be lucky if you made your money back. So you should exit as quick as you can when things do not go your way. Luckily, Victory will do that for you. Okay, we'll give you that heads up. Now, we can look at ANF on a daily and say, wow, there's a nice clean trend. Well, what if we went down to a 5-minute chart, right? Obviously, the last couple of days, not been great, right? It's been messy. But again, if you look at those areas where there's slope, like this sell here, right? This buy here, this reentry, it's that simple. That one little thing of adding that slope on the 20 makes the difference between you getting into trades that are going to stop you out over and over again in these areas, or catch a nice runner. And when you're in a period where things are moving, and if you're day trading, for example, if you're trading on an intraday time frame, a 1 minute, a 5 minute, a 15 minute, you're looking for movement, you're looking for volume, activity. So a day like today on these markets, look at the Dow down 300, S&P's down almost 100 points, Nasdaq down 580. These are significant, okay? But if we were to move down here, when you see this kind of movement, look at these trades. Look at a 5-minute trade here on the S&P, right? So let's walk this back. Could we have taken advantage of this move that just happened over the last couple of hours on the S&P? Number one, if we look at this sell here, did we have slope at the time? Not enough for me. I would not have taken that trade. But what would I have done? Either look for a prior low to be taken out, and there's a series of lows all at the same level here, or a retest of that 20. So I would not have gotten in here, but on the break of these lows, yes. Or if at that point it's too far from the 20, I just wait for the next retracement, and then here's my opportunity right here. This one works out great. It pulls back. It's telling you again, it's not crossing that line. It's turned over again. It's getting rejected there. So that, again, the formula comes together. You can add to your position. You can add to your position. You can add to your position. And so far, still be in that trade. So whether it's a 5-minute, whether it's a 1 hour, 2 hour chart, here's a 2 hour, right? You can quickly tell those areas that are messy or those trending areas by the slope of that 20 and the other rules that we give you. The daily's kind of obvious, the weekly, and of course, the higher the time frame, the smoother the price action should be, and the easier it should be to spot those buys and sells. So a lot of people make the mistake of first starting out when they first start trading, they immediately start on a lower time frame, like the 5 minute. They try to trade the S&P E-minis on a 5 minute chart when they don't have enough experience yet, and it's just very difficult to make a living that way. What you should be doing is starting on the highest time frame where things are very smooth, very obvious. Learn where you have an edge in the market and where you do not. Okay. And Victory will do that for you. But if you don't want to use Victory, you know, look for those areas that are, a smarter place to buy, and then work your way down. If you can make your decision on a monthly time frame, then you go to the weekly, and then you go to the daily. All three of these time frames, you can analyze the charts after market close, where you have all the time in the world, and take a broad look at it and try to decide what's best and what isn't. When you're trading on a 1 minute or a 5 minute, that's all you have. You have 5 minutes to analyze that chart and decide, am I going to take that trade? And if so, how am I going to manage it? Where's my stop going to be? Where are my take profits going to be? What do I do if it starts to go sideways, or, uh, it makes a strong move against me, etc. You don't have time to react, or much time. So you should never start at the lower time frame. You should always start at the higher and move your way back. Whichever one you're at now, whichever time frame you prefer to trade, you can use Victory for that. You can, despite the market you're in. If you're a futures trader, here's oil futures, right? Now, this is a 5 minute chart. Looks a little messy, chaotic, right? Here's the daily. Now, I should get rid of this. What this shaded area is I drew a wider channel. Here it is on the weekly, right? I've been waiting for oil to break out of here one way or the other, because that's a big trade. One tip I'll give you when you find channels like this, or areas of consolidation, is you can draw a line like I did down here. Okay. So what you want to do is draw the length of that channel from the starting point to where the breakout point is. And whichever way it breaks, it will likely have a move similar in size to the length of that channel. So either way it breaks now, there's going to be a major move on oil, something similar to this size, right? So I don't really care which way it breaks, but I do care about what the potential size of that move is. And then I can look for areas of support and resistance, and try to judge whether there's room for that move to actually happen, etc. Okay. We also get into that in those classes. So a lot of people find channels very frustrating. What you should do is be very excited when you see these channels, and have no problem having the patience to wait for it, because the longer it goes on, the bigger the move that's going to come out of it. And there's a big one about to happen there. Look at gold. Okay. Gold, for the longest time, had this level up here where every time it got to that high, sellers would come in, right? Over and over and over again. And finally, we started to see these higher lows. Okay. We started to see this ascending triangle, and finally it broke. Okay. And from there is where, we've gone back to the daily and started taking advantage of these trades right in here. Beautiful one right there, right? Even if you didn't catch the initial break, there it is. Boom. And now we have slope, and we're waiting for a break of this channel. So if we break out of here, we're going for another similar leg. So all these things together really kind of paint a picture for you. But again, if you're not as familiar with technical analysis and so on, you haven't been trading for very long, it doesn't have to be that complicated. All you have to do is wait for the signals, judge the slope of that 20, make sure you're close to that 20, make sure the higher time frames are in line, and then you go from there. Okay. Very, very simple. Bitcoin. How many of you trade Bitcoin or some sort of crypto? It doesn't matter what you're trading. If you can chart it, there it is. Look at this reentry. So look at this. Remember what I said earlier? Here's this buy. Is this a buy we wanted to take when the slope on the 20 is against us? Obviously not. Not at this point, right? We had a clear prior high to mark if, it would clear that. It was far away from there, so that wasn't going to happen. The second condition would be a retest. Well, here it was, and luckily the formula came together again, so it made it kind of obvious for us. So we moves up, consolidates a little. It's telling us again, this is a great spot to enter. You add to it, off it goes. First red bar, you're out of there. Okay. A lot of people think, well, but I think Bitcoin's going to, 500,000 a coin, a million a coin. Why would I sell? Well, why would you want to sit through the dead periods or the pullback periods, right? It's dead money. Why don't you make money here? When you get that exit, take that money, put it into a chart that is giving you the same type of signals. And then if Bitcoin comes back and gives you another similar setup, you move your money there. Why sit through the dead periods, right? Makes no sense. What we want to do is focus on the trending areas, nothing else. All right. Just the trending period. So again, here's a chart of Ethereum. It's similar, right? And here, there was this buy, there's no retest. Here, we would have to wait until we clear a prior high. Would it have worked? Plenty of upside there. On the way back, are there trades? Now, I know you can't really short these yet, but if this was a regular stock or anything else that you could, absolutely, there you go. There are now ETFs on Ethereum, on Bitcoin, et cetera, that you could trade with options, buy puts, et cetera. So you can take advantage of these trades now. Okay. Let's look at a few other charts like Eli Lilly. Eli Lilly, if you look at the monthly chart, and again, when you start from the higher time frames and work down, it gives you a really good perspective of what has been happening with this stock. For the longest time, Eli Lilly has just been on a tear here, just a strong, solid trend. It still is. Okay. Now, if you are more of an investor, then I would use the monthly chart. And it's so obvious. Like this buy here, you had a nice slope near the 20, near an all-time high. The beautiful part of taking trades near an all-time high is that there's absolutely no resistance overhead, right? There's nothing holding you back. You have a wide open road ahead. At the time, the two, it is a monthly, so there's no other higher time frame to look at. So you're going to use just a one, but off it goes. If it pulls back, it gives you another entry. You can add to it if you want, or just hold and just hold. And look at this. You would have been in this from about 170, and it got as high as what, 960 or so? It's still at 860. Okay. Now, of course, you want to take some profits along the way. And in those classes, we teach you to target prior highs if there are any, or we'll teach you how to use the Fibonacci tools to find overhead targets, or just go back into the indicator here, add on the take profits, and there you go, right? So you're here, scale some off, you can put it back on, and off you go. So if you're an investor, it's super simple. You only have to look at these charts once a month. That's all you have to do. It's super, not time consuming at all. It's fantastic, but I would work my way down. So, when you see this strong of a trend and this clean of a chart, and you go down to a daily time frame, for example, all you're waiting for are those areas with slope like this. Nice trade. Boom. There you go. It goes into consolidation. It's a bigger heads up that there's something coming. Now, if you see the higher time frame, looking like this, which way do you think that channel is going to break, right? I mean, it could break either way. We don't really know, but chances are it's breaking in, higher. It's breaking in the direction of the higher trend. So we wait patiently, and there's that break, and off you go. And here was that buy signal, the reentry. So we had the buy, did not break a high, but then it came back and retested that 20, right? So that was your heads up. It's telling you right there, it's about to break, and off it goes. And again, imagine taking a winner this size how many small losing trades that you'll overcome, right? It's all about math. So, what else can I show you? Let me know if anyone wants to see any other symbols. I'll just pick a few off the top of my head. Forex. We haven't really covered Forex, right? Um, let's look at USD, the Swiss franc. There was a signal earlier today. Let's see if it's still there. So these signals, by the way, um, they can change throughout the life of that one bar, the candle. So if this is a daily bar, it's going to fluctuate throughout the day. So for example, this is giving us a sell here right now with this dot. But let's say this rallies before the end of the day, that dot can disappear. Okay. But once that bar closes, if there's a signal there, it's there for life. It does not repaint that way. It does not change. So what we want to do is wait for that bar to close. And if it looks like this, then go through our rules and judge whether or not we should be taking that trade. But if you look back on this chart, it's pretty obvious which trades you wanted to take, to the long side, to the short side, etc., versus the ones that happen when there isn't a lot of slope or a clear trend one way or the other, or the higher time frames aren't in alignment with the time frame that you're looking at, etc. So again, we're just trying to put the odds in your favor, stack the evidence of why you might want to take a buy or sell, and keep you out of the choppy markets, right? Let's look at USD CAD here, and then I'll show you some um, other penny stock type plays, or some pump and dumps that, if you're wondering whether or not this would catch them, I'll show you. Now, look at the USD CAD. Is this a chart you want to trade, right? When you look at this, what are your chances of getting stopped out on this, right? You take a big move up, pull back, big move up, right? It's all over the place. The bars are all different sizes. It's just a mess, right? This, whether there's a strong slope or not here, is not a chart I would consider. What you want is a chart, like I said, like this, where what you're going to notice when you have a strong trend is that the bars are all pretty much the same size. Okay. And you're usually making higher highs and higher lows from one to the next. Okay. There's the odd time where you get a bigger bar, but most of them are all very similar size. But when you got a messy chart like Zoom or USD CAD, the bars are all over the place, and it's just ugly. It's just not very clear, right? Now, let's go back and have a look. Say we go back to the S&P 500, and we go back to, I'm going to scroll back here as quick as I can, to where the pandemic started, right? Some major event. You go back to the dot-com crash, the great financial crisis of 2008, whatever, just to judge whether or not this would have caught the move. So here, early 2020, right? We're humming along, everything's great. And then suddenly, in late February, last week of February, it's announced that we're going to go into lockdown, right? And what happens? We get that big gap down right here. That was the start. So yes, it gave us a sell. Was it a sell we wanted to take at that time? Not for me, not on the first day. Why? Not enough slope on the 20. We had not cleared a prior low yet. We were right there, but we hadn't cleared it, nor did we retest that 20. Following day, though, we clear that low with authority. So from here, you want to get in. Okay. On a retracement and a new sell, you definitely want to get in. And there it is. And then once it turns, it starts to go the other way, and we focus on slope in the opposite direction. Okay. Something like GME, right? How many of you followed that story, right? So let's go back here. Where was it? What was it? Further along here, I think. There it is. This is the most recent pop, right? On it. Again, here's that buy. Do we want to take that buy? No. Why not? Slope is against us, right? Did it take out a prior high at that point? No. Had it retested the 20? No. But it moves up a little, comes back, holds the 20. Look at what we have, another buy. This time, despite not having slope, we do have a successful retest of the 20. You get in and off you go. Now, I'm not telling you to follow stocks at GME, et cetera. What I'm telling you is that this is a strict set of rules that I've developed over time that make it almost impossible to miss a big move. And with our money management rules, and I will teach you, it's almost it is impossible if you follow those rules to take a big loss. And that's really what you're looking for. I don't expect you to catch a full move like this. When you get stock like this, by the way, if I'm in a trade and I get a big gap in my favor, right? Then I usually sell the whole position. I consider that a gift, take that profit and move on to the next trade. Or I take most of it off and leave a little more in case there's follow through. Now, gaps are one thing you cannot control. Okay. So if say you got in this trade here and it turned around and gave you a sell, this is a small loss. You can control this. But let's say you got in here and the next day gap down to here. You can't control that, right? So that's where the money management rules come in. What we're going to teach you is how to make sure you don't blow up your account on something like that. All right. And an obvious one is don't trade around earnings. Earnings cause gaps all the time, right? So there it is. So let me just tell you how you can grab a copy for yourself. By the way, we have this programmed on TradingView, which is this platform, as well as Metastock. This is what it looks like on the Metastock platform. Okay. Same concept. You have your buys, you have your sells, you have your exits, you have your higher time frame ribbons. Everything is there. By the way, if it isn't obvious, I should have told you, we color every bar the same when we're in a trade just to keep you disciplined, right? Because say you get in here, starts going in your favor, it's easy to sit in, right? But once you start getting a couple of red bars going against you, that's when you might get scared out of the trade, or think you're going to give all your profits back and quickly sell, only to watch it continue in your direction. So to help you with that, we paint it all the same color, and helps you stay in the trade either way. So Metastock or trading platform, programmed on both. And if you go to tradingwins.com, it's WINS, tradingwins.com/start. That'll take you to this page. Now, it's a lengthy page. It's going to tell you a lot about myself, Trading Wins, etc., what we've been doing over the years. There's a brief video here where I explain, more in depth of what we do. Throughout this page, you're going to see these testimonials. These are real testimonials. We have the emails from our clients to back it up. You can, if you want proof, we can show you, but they're all throughout the page. Our offer, though, today is this. We're giving you a 97% discount here. We just want you to try it out for a month, a full 30 days for just $7. And this is what you're going to get. You're going to get access to our full Trading Wins Elite program, which is many hours of training videos. And I'm going to go over the topics in a second. Okay. Along with any upgrades that we send out throughout that period, you'll get those included as well. You're also going to get 30 days access to our Trading Wins community, to our pro service, where myself and our members get together on Zoom, just like this, 3 times a week, every Monday, Wednesday, and Friday, minimum of an hour each time. A lot of times it goes to an hour and a half, 2 hours, where we review charts together. We look for trade ideas. It's your opportunity to come in and ask me any trading related question you like. Like I said, I've been doing this a very long time. Technical analysis is my thing. So any question, anything that you're having difficulty with, I will try to answer for you. It's a great group, by the way. As I mentioned earlier, most of them have been with us for 8-10 years, so they're very experienced, and we try to help each other out. So for a personal issue that you're having with your trading, it helps others. in the group. So we really encourage it. Okay. But the main thing is we've reviewed charts. We talk about the markets, where we think it's going, look at trade ideas, etc. And we also, as a part of that, I will send you an email 5 times a week, every Sunday to Thursday evening, recapping what happened on the markets that day and talking about any trades that I'm looking at doing. What we don't run an alert service. I'm not giving you recommendations. What I'm telling you is what I am doing. Okay. So you get to look over my shoulder, see the trades I'm putting on, and it's meant to reinforce the rules. Okay. So that if I say, hey, this is a buy I'm interested in, and I explain why, over time with the repetition, you will get to understand why I like this trade versus another one, etc. It just helps you learn, helps reinforce the rules, and helps you gain a better understanding of the victory system. And of course, with this package, you're going to get the indicator as well on TradingView here for 30 days. Now, if you go to tradingwins.com/start, click on one of the banners that says trade like the top 1%. That'll take you to this page. As you can see, it was 97. It is now 7. And again, we'll repeat what you get. That course, the elite training program, the training videos, many hours of training, they're going to cover the foundations of financial markets, what they are, how they work, etc., for complete beginners. We're going to go over psychology and money management as well. And then we get into technical analysis, and we do the basics as well as advanced. Okay. And then we talk about strategies. In addition to victory, we will give you some of the other strategies that we use. And then we get into options, some options information, not only the basics of, what is a put, what is a call, debit spreads, credit spreads, etc., but we go over the option Greeks in some detail as well. So there's plenty of information there that even if you decide not to continue using victory, you're going to gain a lot from all these videos and just general information on technical analysis, market psychology, money management, all of that, all for $7 for a 30-day period. It does renew at the end of the month, but again, if you're not interested in renewing, just cancel ahead of time. That's tradingwins.com/start. David has put the link in the chat there. Let me see if there's any questions quickly before I hand it back to him. Ryan was saying it's time in Eastern. Yes, we're in Eastern time. Does it work on NinjaTrader? No, it's not programmed on NinjaTrader right now, like TradingView or MetaStock. Right now, we are looking at other platforms to add this on, but that's it. If you have any other questions, you can reach me at info@tradingwins.com. I'm going to hand it back to David. And David, thank you again for having me on. I really do appreciate it.